Gold versus Bitcoin. Which is the better inflation hedge? Hook. Your dollar is worth less today than it was last year. And if inflation hits like it did in 2022, you could lose thousands just sitting in a regular savings account. But here's what nobody tells you. Gold and Bitcoin aren't even playing the same game. One's a 1,000-year-old wealth tool. The other is digital cash that didn't exist 20 years ago. And only one of them is actually protecting your money right now. Let's break this down. Part 1. What inflation actually does to your money. Real quick. Context. Inflation means your money buys less stuff. In 2022, inflation hit 9.1%. That's the highest in 40 years. So if you had $10,000 sitting in a regular savings account earning 0.05% interest, you lost around $900 in buying power. Just gone. Your bank wasn't protecting you. That's why smart people get weird about assets that historically hold value during inflation spikes. Gold's been doing this for literally thousands of years. Bitcoin's been doing it for 15 years. But the mechanics are completely different. And honestly, that matters way more than most people realize. Here's the thing about average Americans. Most of you have a 401k or a Roth IRA sitting in index funds. Maybe you've got some money in Fidelity or through your employer. That's great. That's actually the right move for most people most of the time. But inflation hedge? That's different. That's what you do with a portion of your money when you think the dollar is getting weaker. Part 2. Gold, the boring hedge that actually works. Gold is predictable. That's boring, but it's also trustworthy. When inflation rises, gold typically rises with it. Not always perfectly, but the correlation is there. In 2021 and 2022, as inflation climbed, gold held relatively steady around $1,800 to $2,000 per ounce. It didn't spike huge, but it didn't crash either. It just protected you. Why? Because gold is scarce. You can't print more of it. Governments can't devalue it by printing currency. It's been a store of wealth in every major civilization. Your grandmother understood gold. Your bank understands gold. If society completely collapsed, gold would probably still have value. Bitcoin might not. The downside: you get zero income from gold. Zero. You don't get dividends or interest, it just sits there. If you bought gold in 2011, you basically broke even by 2021. The S&P 500 would have returned like 400% in that same period. So gold is a hedge, not a wealth-building tool. And practically speaking, storing physical gold is annoying. You've got security concerns, insurance costs, storage fees. Most people buy gold through ETFs like GLD on Robinhood or Fidelity. Then you're trusting a fund to actually hold the gold. Not ideal if you're trying to completely avoid the system. Part 3. Bitcoin, the volatile inflation hedge. Bitcoin is the opposite. It's not boring. Bitcoin is speculation dressed up as a hedge. Here's what Bitcoin proponents will tell you. It's digital scarcity. There will only ever be 21 million Bitcoin. Can't print more. So theoretically, as dollars get weaker, Bitcoin gets stronger. And sometimes that's true. During the inflation spike of 2021-2022, Bitcoin went from 30,000 to 68,000. That's inflation protection on steroids. But here's what actually happened. Bitcoin then crashed to 16,000 in 2022. That's a 76% drop. Meanwhile, gold stayed steady. So if you're looking for a stable inflation hedge, Bitcoin is not your answer. Bitcoin is a bet on Bitcoin becoming mainstream currency, which is a different thesis entirely. The appeal is real, though. Bitcoin moves fast if you bought at the right time. You made serious money. Millennial investors who jumped in early made life-changing returns. But that's not inflation hedging. That's gambling. Inflation hedging means your money should be stable and predictable. The actual answer. Here's what actually works for most Americans. Most of your money stays in your 401k and Roth IRA with index funds. That's your long-term wealth builder. Then, if you're worried about inflation in the next 3 to 5 years, take maybe 5 to 10% of your portfolio and split it between gold and Bitcoin. Gold is your boring protection. Bitcoin is your speculative play. You can buy Bitcoin on Robinhood or Coinbase. You can buy gold through GLD on Fidelity. Don't go all in on either one. Call to action. Which one are you choosing? Gold or Bitcoin? Drop a comment. And if you want more videos about building wealth while inflation eats your savings, hit subscribe. New uploads every single week. Peace.